Hey, welcome back, players, traders, and haters. What's up, family? How you doing? It's your boy D, and this is D's Daily DD. Today, I want to talk about a couple things. What's happening with the stock market? We're going through a small crash right now. There's a lot of fear. Leading the way was the SPY, and then of course, all the other stocks, the meme stocks. Just the whole market pretty much was red today. All right, so I'm gonna give you the good, the bad, and the ugly. That's what I want to talk about. That's what's on my mind. But remember, I'm not a financial advisor. This is not financial advice, right? So don't take it as that. Take it for educational and entertainment purposes only. These are just my thoughts, my opinions. I'm just some guy on YouTube who likes talking about his favorite stocks. But you always have to do your own DD and your own research and make your own financial decisions when it comes to your financial goals. All right. So yeah, guys, just it's been a rough week. Feels like we're getting kicked while we're down. And what I think is funny is that even though the whole market is pretty much coming down, there is a lot of AMC naysayers and haters out there that are just like, oh, pretending like it's only AMC or only GameStop or only BBIG or whatever stock, right? That it's only them that are going down like this. But you have to pay attention. This is psychological warfare, in my opinion. That's why, in the meantime, I'm gonna learn and read and do more research on different topics, right? Because I feel like all of the DD or most of the DD is already done on AMC. If you have your conviction, then you're not going anywhere. And that's why I want to, broaden my horizon on other aspects of my mind and my thought process. Um, so yeah, first let's jump into this. I've been talking about how I've been going over this book. I've been reading most of it. I'm almost done with it. A few more chapters, but I like to share some, parts of it with my subscribers. And so, everyone has their own plans. But I'm just gonna read to you this little part that stuck out to me as far as like planning and so on. So, planning is important. But the most important part of every plan is to plan on the plan not going according to plan. So yeah, we were all planning for the squeeze to happen last year. Hasn't happened yet, but that doesn't mean that it's not gonna happen, right? In my opinion. So what's the saying? You plan, God laughs. Financial and investment planning are critical because they let you know whether your current actions are within the realm of reasonable. But few plans of any kind survive their first encounter with the real world. If you're projecting your income, savings rate, and market returns over the next 20 years, think about all the big stuff that has happened in the last 20 years that no one could have foreseen, right? So think about it. September 11th, a housing boom and a bust that caused nearly 10 million Americans to lose their homes, and a financial crisis that caused almost 9 million to lose their jobs, a record-breaking stock market rally that ensued, and a coronavirus that shakes the world as I write this. A plan is only as useful if it can survive reality. And I think that, can help a lot of people right now, because it's tough, right? Just seeing your stocks, your money, right? Everything, the stock market go down, especially when you're an investor. All right. And that's why I keep saying pay attention to what's going on around us. Let's talk about that for a little bit. And what I notice is that, you know, big investors, big money is in trouble right now, just with reading things like this. Credit Suisse's volatile week spooked wealthy clients, with several families in the Middle East and Asia collectively pulling hundreds of millions of dollars per Bloomberg, Bloomberg, God, right? And then as I search for bank news, I didn't even put good or bad. It all seems bad. Look, Lebanese banks to close indefinitely as holdups continue. Bank of England says pension funds were hours from disaster before it intervened. Um, the douche bank echoing Credit Suisse's bond buyback. Bank of America to pay AIMBAC 1.84 billion to settle crisis era mortgage case. Credit Suisse to buy back 3 billion in debt, sell landmark hotel as a credit fears persist, right? Selling an asset to get some liquidity, right? They want cash because they need it right now. Credit Suisse pay down debt to calm investors. So think about all that, right? That's what I pay attention to. That it's the whole stock market right now. That's this is going through. This is happening. So for me, it's psychological. As I learn more and more about the market, is that more investors typically make better returns in the long run, right? But let's go over this real quick. This information that I got here. So this has to do with the book again, and I'll bring it back up right now. But let's go over this. So there's different kinds of investors when it comes into when it comes into investing in the markets. and you have to decide your risk and do your research and decide what kind of investor you want to be. But the definition is a person or organization that puts money into financial plans, property, stocks, etc., with the expectation of achieving a profit. So I just got some examples here. The first example, Billy, right? We're just gonna call him Billy. Always a buyer. He just keeps investing, buys the dip, invests rain or shine, right? That's his style of investing. He's gonna keep going over the long run. Next, you got Ricky, who saves cash, right? Tries to buy the bottom, tries to sell at the top, and waits to buy after recession. So, what's the fear right now? What's the narrative right now that we're about to go into recession? So this investor would pull all their money out and just wait to try to see if they could catch the bottom. And then you have Chad. I put Chad because nobody really likes Chads, right? And they have a bad reputation. So this is the kind of investor Chad is. He pretty much is a paper hand, pulls out every few months or pulls out a few months into recession, kind of gets fearful and sells, for a loss, and comes back once recession ends and catches FOMO and then tries to and trades on emotions. So not the type of investor I would want to be. You can do whatever you want, play it how you want, right? I'm not a financial advisor, like I always say. I'm just here to give you some info. And Chad, right? I'm not the Chad. Me personally, I'm more like Billy because, like I've said before, AMC is not my only play. I have many different stocks, but AMC is my favorite play, and I think it's going to create a great profit, right? But you have to know what kind of investor you are personally, and then which investor makes the most profits? Question mark. It's actually Billy, right? And there is statistics on that. I'm gonna give you the example from the book. But these three investors invested over the same time. These are the kind of investors, and we'll just say that it's like from the same amount of time. So if Billy would have invested this money, right, he would have invested over time, and he would have earned around, right, $435,000, right? So just for an example of his style of investing and what happened. Next would be Ricky. So Ricky would invest the way he does and goes, back and forth, but doesn't really trade every day or anything like that. He would have ended up with around $257,000. And then you have Tom, who pulls out and, kind of trades on emotions. Would have made around $234,000, right? We're talking about over time and based on the behavior. Investor A, Billy, or in this book, it would be Sue, would make the most returns. All right. So just giving you some information here, right? But just, you have to make your own decisions. Next, I'm just going to touch on some AMC things real quick. I know the price was down today. It was down pretty bad, actually. But I'm not looking to sell, so that's not what I'm looking for right now anyways, that price, right? So as you can see, we came down at the bottom of this and we broke out for a while, got rejected, and now we are down at this support line, which AMC has gone lower, right? 596 is the lowest it's gone. So it's right above it at around 653. So it could definitely still go down lower and catch support down here. Now, what's interesting to me is that it's on this overall macro trend line, right? It's at the bottom of it and it's literally on the top of it right there. So we're not gonna know what happens yet. I've been saying, I want to see volume come in. I haven't seen the necessary volume that it needs to push up, and I want to see the RSI reverse, because it's been down here before and usually reverses, and then flips and starts to make an uptrend, right? So I think that's what's coming based on the dilution news, based on those shares that are going to drop for APE, and right, it's going to be a chain reaction. I mean, at the end of the day, AMC owns AMC and APE. If one runs, I would assume the other one would run. Okay, that's just my prediction and my thought process. And the overall market is what's bringing us down even heavier, right? That's why you see these big negative 8-10% days. Next, the only thing that it is doing right now, since there's low volume, is that it's increasing the days to cover. So you're talking about 3 days to cover for APE, and then this keeps going up. I believe this is a new high for AMC. That's 4.11 days to cover, right? With 100 million shares short currently. And they're paying for it. I mean, there's a borrow fee of 21.9%. that's costly, right? Depending on how many shares you're short, 100,000, 200,000, 100, whatever. It's a yearly fee, but this fee already has been holding, 20% for at least a month. All right, so that's pretty expensive. And remember, shorts, in order to short something, just, the overall method, you have to have a margin account and you have to stay within those margins. So that's why when I see the whole market crashing, I do think it's good for stocks like AMC, like BBIG, for GameStop, where something can crack and somebody can, not meet the margin, or something can break, and we're gonna see a pop. Right? That's what I'm thinking, right? Because the shorts have to cover at some point. And then here's just the fee. This one's showing 22.14%. Like I said, this is for the month October 6th, right? And I know it's only showing the day. I don't know how to change the settings. It used to show the past, but this fee has been holding for a while. And then, um, the last little piece I want to talk about is inflation. So inflation, we're at around 8.3% as of August, or 8.3 points, and it hasn't not been this high since around 1980. And in 1980, it hit 13.5%. And it took about 2 or 3 years for it to come back down and level out and keep going down, right? So, not to give you fear, but just you have to prepare yourself mentally, financially, whatever you got to do in order to be ready for this in case inflation starts going even higher, right? Because the highest it's ever been is 13.5%. And that's high, guys. I mean, right? Everybody feels it. It's involved with everything that we're doing right now. Our cost of living is insane, and I know it doesn't matter where you live. In some places it's higher, but it's high. And then just the last thing, CEO, before we wrap it up for the weekend, is the news, right, that AMC and Netflix are doing this together, and they're gonna show a Netflix movie at AMC in the US and in Europe. The Knives Out sequel starring Daniel Craig's success could lead to more Netflix movies at AMC. So what I just want to mention and talk about in this is that, remember, the short sellers used to say that we were enemies as far as like AMC and Netflix, that they were against each other, and that was part of the short thesis. I think it's hilarious that now they're teaming up and they're gonna release a movie in the theaters, when back in the day, right, the shorts were like, oh, streaming is gonna knock out, it's gonna knock out the theater, it's gonna kill the theater, it's gonna kill the movie business. Well, that's funny. Disney Plus partnered up with AMC not too long ago, and Netflix partnered up. So, I don't really agree with that, and I don't agree with many things the shorts say, especially by AMC. But everyone's entitled to their own thesis, their own theories, their own investments, and their own thought process. All right, guys. So that's all I got for you guys. Just wanted to share that information with y'all. So I hope you have a good weekend, right? It's been stressful lately, but if you're holding, you have your conviction, you know what you're holding, then you're not really sweating it like me, because I've studied and I've been in the markets and I've seen the uptrends, the downtrends. Right now we're in a downtrend, unfortunately, but it's not gonna last forever. I don't know the time span, but things don't last forever, right? So eventually we should find a bottom in the market, start to make our way back up. And then the other theory is, right, if enough prices fall for the longs, for these hedge funds, they're gonna have to meet margin calls eventually. Anything can happen. There's things that we can't predict as well, so keep that in mind. And yeah, catch you guys in the next one. Peace out.